What's up, guys? Most people miss setups, and this is how I simply never do. This is like the most beginner friendly strategy that every new beginner should simply try. Okay, after this video, I want you to tell me if you think you can follow up to this strategy or not. If you can follow this strategy, please give me a follow and a subscribe. In the comment section, drop the fire emoji simply. And if you like this valuable content, just stay in touch. Turn on the notification bell so that you can miss out any upcoming videos. Okay, with that being said, let's dive in. Okay, so now here, the simplest strategy every beginner can simply follow. Look at this. What we need is simply a zone and a fair value gap and a break and retest. Only, nothing less. A zone, fair value gap, retest, and break. Okay? Or a break and retest. Okay, let's look for zones. Point of interest. How do we spot those? Those are zones where price touched many times and rejected sensitively, like rejected off massively, or there was big movement off from that particular area. That is a point of interest. For example, this area over here, this is the area of interest. If you can stretch this all the way out to that side and all the way to that side, you can see that price literally is moving and respecting our areas, our setups. Okay, now this is quite interesting because look at this. Now that we have our point of interest, we need a particular fair value gap or a break of some sort, right? And we are going to do, what are we going to do so that we can find that zone? We're simply going to spot like areas where price moved massively that it left there was space in between the candle before the big move and the candle after the big move. And how this would look like is, it would look like okay, what, how do I do it? How do I remove this? Oops. How do I remove this? Come on. Okay. Alright. There you go. Alright, now this is how it would look like. It will simply look like this. There will be a space in between the candle before the big move and the candle after the big move. Okay, it's simple, isn't it? So if you simply try and follow this concept, it's quite simple because most people don't follow it. That's why it's quite simple. Like, everyone can do this. Look at this. Now that we have this fair value gap, we simply want price to do some sort of reaching out to that fair value gap and execute from there, right? Look at this. Price simply made this interesting pattern. It made this fair value gap as it was going to the upside, right? It made this fair value gap as it was going to the upside, and it reached this high, which is our point of interest, and it retested the fair value gap, right? And then broke below the fair value gap, then came to retest the fair value gap again. And as it was retesting the fair value gap, it also happened to be retesting the EMA, right? And the EMA is quite some sort of like a respective level where price respects a lot. So it reaches that zone and you definitely have to react off of the zone, okay? And what we were simply now waiting for is to see some form of confirmation so that we can enter the market, okay? This is how it actually would have looked like if I were to enter the market at that particular area and at that particular zone, okay? Okay, so this is how it would look like. I wait for confirmation. Price made this fair value gap. Okay, you've seen that. Now we wait for price to come and retest our fair value gap. It does that here, but it doesn't go according to how I was thinking it would have gone. Okay, I keep on waiting so that I can find the perfect setup. And I see that price breaks below the EMA and retest the EMA again. As it is retesting the EMA, it also happened to be retesting the fair value gap. Okay, now everyone is asking, okay, dude, we have seen that the market is doing exactly how you're saying it should. Now, what is the next move? Okay, so I simply keep on waiting because I don't have the confirmation that I'm looking for. I have seen that the price made the fair value gap. Okay, it rejected off of a point of interest, which is this zone over here. Okay, we have seen that. Now, what should I do? This is the point where you simply have to mark out the highs and lows that the price recently made, the recent high and the recent low. Okay, and in this area, it would happen to be that high, right? There's this high, or we can mark out this one, but I think respectively we should mark this high, which was a retest on the EMA, right? And then as we marked out that one, okay, no. Okay, let me make this black so that I can see it clearly. Let's change the color of this so that you guys can see it clearly. Let's make it black. Okay, so that's black, and this also should be black so that you can see nicely. Okay, good. Okay, now look at this. We've marked out the high and the lowest low where price reached recently. Okay, look at this. Price touches our lowest point. It literally touched the lowest point before, and it didn't manage to break below the lowest low. Okay, and then it simply goes back to the upside and retest. This is also happening on the 4-hour time frame. Take note of that. Okay, and as price retests this low again, it doesn't break, but this was the confirmation that I needed to know that the market was going to go bullish again. Okay, how was I going to know that? Okay, let me show you. Let me show you quite interestingly. This is how it would have looked like. Free chat movement. Alright, so now that we've marked out our low, this which was made over here, now let's go to the 1-hour time frame. Look at how the 1-hour time frame looks like. Okay, the 1-hour time frame looks like this. The low which the price rejected off earlier is this one, right? Look at this. Price is moving in an interesting pattern, which we all see familiar, isn't it? Price reaches this high and rejects off insanely. However, it is keeping on breaking the EMA. But now look at what happens. Just what I said it would. We want to see some form of break and retest. Look at it. Price reaches this zone, it rejects, right? As it rejects, take a look at this. What you're probably asking yourself, okay, Tadiwa, we can hear you. But what exactly caused this move to happen? This move right there. Okay, if you can extend your horizontal ray, right? You can see that it was a sensitive level that was made before the price even began to range in this particular zone. You see, it was a sensitive level. So now price simply used that zone as the support so that it won't even break below that particular zone, and simply use that zone as fuel so that it can go to the upside. It's simple, isn't it? But it's not easy. Definitely not easy, because who is actually going to be patient and say, okay, I can wait for the market to give me the correct signal for me to enter and then enter. Because if you had entered in a wrong time at a wrong time using the wrong entry signal, damn, dude, you are meant to lose. Like, I don't know I can say this, but you won't survive long in the game. But okay, now that we've seen that, your risk to reward ratio would probably be a 1:2, and it would be like all the way from here to somewhere like over here. For your take profit, if you can notice this pullback is people removing that profits from the market, like people taking their profit and entering back again in the market. This is actually interesting, isn't it? Because if you can use this theory, it is like like I told you earlier that price moves in interesting ways, and one of those interesting ways is a push and a pullback, right? Now this pullback is the people taking their profit and you waiting for the perfect signal. Look at this. If you missed this big movement up to the upside, right, you can simply wait for price to reach a particular level where people take their profit, and then you enter from there. You don't enter at okay, let me show you. You don't enter it. All right, now. Okay, good. You don't enter at this particular level. If you over leveraged, you are going to definitely get your account blown. You simply wait for price to make this pullback and you enter at these lows over here. And then you use these lows as your entry zones, and then you simply wait. And if you're probably asking, you simply said price will break and retest and reject and retest again, right? Let me show you something. If you can pay closer attention to this, look at this. If you can see that this take profit zone, right? I told you that price respects these other zones that were made during these impulsive moves, right? Look at this. Price literally broke above and retested. That red candle simply means the price retested that zone and rejected off insanely. Dude, look at this. It literally skyrocketed all the way from here. However, if you can pay a closer attention, you can see that price was creating a reversal pattern. But most people would have thought, okay, now the market is about to reverse, because look at this. This is a head, it's a left shoulder, head, right shoulder. Now it was only meant to what? Reject to the downside. Okay, but pay a closer attention to the bias of the market. Look at this. The market is trending to the upside. Okay, so literally you can't sell when the market is going to the downside. Like, you can't sell when the market is going to the upside. The trend is your friend. Well, I have to learn that they're not the easy way, but I had to learn that some way, one way or the other. The trend is your friend. Okay, now that you have known how to enter, is also a time that we can talk about how you can exit the market. Okay, it's kind of interesting, but how do you exit the market? Well, as a person who's a trader, you don't have to be greedy. So you simply have to set, I think it's a 1:2 profit reward ratio, something like that. A 1:2 risk reward ratio, or a 1:3, something that simply suits your risk appetite. Because let me tell you something. Have you ever seen a scenario whereby your take profit is simply the most sensitive zone the price is going to get at? Because you are like, okay, I won't take my profit at this particular price point because, I don't know why. Because you want it to go even higher and make you more money. Dude, and then this happens. Look at what happens. Your take profit would look like this. This will be quite an interesting an interesting way for someone to learn that they shouldn't be greedy. Okay, let me show you. Now you are simply holding all the way from down there, and the price, your take profit was about this area here, right? And then look at this. You don't even check your smartphone or anything, but the price reaches your take profit level, and as soon as it reaches your TP, that's when price starts doing this, bro. Like, look at this. You literally don't have another way, but you simply have to set something that suits your account growth type. Are you an aggressive trader, or are you someone who's most likely going to take it slowly but at the same time reach their target? I would rather prefer you simply take it slow and you reach your target eventually, but if you try and rush, it's the fastest way to crash and also the fastest way to blow your account. Dude, okay. So now, if you enjoyed this video, please don't forget to leave a thumbs up and subscribe to the channel so that I can keep on making content like this one. And I'll catch you on the next video. Peace, dude.